I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.
Hello and welcome to another installment of Liberty Nation's Swamponomics videocast. I'm Andrew Moran, Liberty Nation's economics editor. This week, do you smell what Wall Street is cooking? Perhaps the Wall Street Journal lost its sense of smell after publishing a piece titled, "Why Are Stocks Up? Nobody Knows." In the deck, the newspaper further says, quote, "A torrent of bad news hasn't been enough to sink the market." But is the United States really drowning in a sea of bad news? The US economy is expected to rebound in the second quarter. Tariff-driven inflation has yet to materialize significantly in the monthly numbers. The US labor market remains intact for now, and private investment is skyrocketing. What's more, President Donald Trump is getting some trade deals done ahead of the August 1st deadline. And this is key: trade. When the financial markets suffered a significant nosedive in March and April, it was driven by investor panic that growth would slow, inflation would soar, and the job market would crater. Fears that massive tariff rates would upend international trade exacerbated these worries. Months later, whether it is taking a bite out of the taco or that worst-case scenarios have not appeared, US stocks are trading at all-time highs. Here's a breakdown of how the leading stock market benchmark averages have performed since April. The blue-chip Dow Jones Industrial Average has climbed 13% and is up 5% year-to-date. The tech-heavy NASDAQ Composite Index has spiked 25% and is up nearly 9% this year. The broader S&P 500 has soared 18% and is up 8% on the year. The Russell 2000 Index, a benchmark average that tracks 2,000 small-cap companies, exited the bear market, roaring 18% in the last 3 months and is up 2% since the start of the year. Recent trade agreements signaled that tariff levels might not be as excessive as the president proposed at the White House on Liberation Day. Additionally, trade deals are opening up foreign markets to U.S. goods and companies, which could give exports a boost and the GDP. Another factor is the Federal Reserve System. While the White House pressured Fed Chair Jerome Powell to lower interest rates, the U.S. economy is still outperforming expectations, even with the benchmark federal funds rate in a restrictive territory. That said, the futures market continues to anticipate 2 interest rate cuts this year, totaling 50 basis points, which would provide further easing in a hot economic landscape and possibly serve as a life raft for the labor market. Could things change on Wall Street in the second half of 2025? Absolutely. Higher inflation that is not transitory might spook the Federal Reserve into leaving interest rates on hold. Trump could, out of nowhere, take the Truth Social and change his mind on some trade deals and slap massive tariffs on major trading partners or products. Consumer spending could tank, fiscal fears might flood the street, or another conflict could pop up in the Middle East. Ultimately, a number of events could transpire, but would it be as bad as a spring bloodbath? Unlikely. If there is one thing that investors hate, it is uncertainty. Although we are still living through a degree of uncertainty, what we know now is enough to satisfy traders. Heading into New Year's Eve, it will be all about the economic data and what the president posts on Truth Social. That's it for me this week. Please read my full stories on libertynation.com and be sure to check out my previous Swamponomics TV videos and interviews. Liberty Nation does not endorse candidates or campaigns or legislation, and this presentation is no endorsement. Thank you. I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.